Hey traders, happy Sunday. Jeremy here. Wanted to take a second to share a really quick video about what type of trader you are and where your edge in the market is. So the last month and a half or almost 2 months, the choppy market action that we've had has been grueling for my trading system that I utilize, which really relies on trends to make money. In these environments, if I stay true to my trading system, it requires me to continue to take trades that I see when I see setups that fit my trading plan, even if that plan has not been working out well in recent times. Now, traders often suffer from something called recency bias, a memory cognitive bias that makes you basically favor recent events over historic ones. And what this means in terms of trading is that traders often look to the drawdown in their account due to recent market movements and then throw away their trading system or stop trading it because they can't stomach the losses. But the truth is, periods of subpar trading usually comes just before the establishment of new trends. And if you quit your trading system in the short term, you're likely going to miss out on big opportunities to make back not only your losses, but then some when those conditions shift. So for me, I am continuing to be true to my methods. I'm continuing to take the trades that I see, even though they haven't been panning out lately. And in the recent videos, I've spoken about needing to revisit my trading plan and look for what I've been doing wrong or what hasn't been working. And the one thing that has stood out to me has been wanting to loosen my stop loss rules and try to avoid getting tapped out on losses before prices then reversed and made their way back up to my profit targets, which is something that has unfortunately been happening quite a lot recently. But the piece here that I want to share is that this really shows that you absolutely have to have faith and conviction in your trading system as a trader. If your confidence is easy to shake, you are going to be eaten alive by the markets, especially if you play in the futures market, which is a lot more volatile. And the only way to have true conviction in your trading is to develop a system that has been back-tested and proven to turn profits, not over any one trade, not over any one trading week or even full trading month, but averaged out over time. And if you have a system that lets you get the law of averages to work in your favor over time, then you can just simply keep doing your job, which is to take the trades that fit your rules and control the risks of those trades when you're in them. And just to give a couple of examples here, some traders rely heavily on knowing their overall win-to-loss ratio, meaning that they have to be correct on their analysis more often than they are wrong in order to make money, while other traders rely more on the profit-to-loss ratios of their trades and the individual trades that they take in order to gain an edge. And to demonstrate this point, I want to show a couple of charts here. So this here, and I hope you can see this, I'm sharing a couple of pieces to a lesson that I have in the escape velocity trading system. But this is an example of a trading system that relies heavily on a high degree of correct analysis, using a 1-to-1 reward to risk ratio. This means that you are risking per trade the same amount that you stand to potentially gain on that trade. If you are right or wrong, you're going to lose the same amount as if you gained, right? So here you can see the number of losses and the number of wins and the total gain or loss. So if you lose all 10 trades, and in this example, we have a 1-to-1 ratio, risking $100 to make $100. If you lose 10 trades, you're going to lose $1,000. If you lose 9 and win 1, you're going to lose $800. If you lose 8 and win 2, you're going to have $600, and then $400, $200, and finally 0. If you win 5 trades and lose 5 trades, you're going to break even. Now here's where it gets interesting. If you lose 4 and win 6, this is the first time right here that you actually turn a profit utilizing this system. So you have to be correct on your system more than 50% of the time. So now let's look at a trader that instead of relying on the degree of their analysis, meaning that they have to be right more than they are wrong to be able to make money, now let's look at a different system. In this system, you have a 2-to-1 reward to risk ratio, and this means that one of your rules to enter a trade is that you have to see a logical and probable outcome of potentially being able to make twice as much as you are risking on the trade. And if that does not happen, then you do not take the trade. So in this instance, if we have 10 losses and 0 wins, we still lose that $1,000. But if you look here at 9 and 1, instead of losing 800 like before, we're now down 700. At 8 losses and 2 wins, instead of being down 600, we're only down 400. At 7 and 3, we're only down 100. And here is the apex of this example. If you lose 6 trades and you win 4, you can still turn a profit. That means you are only batting 40% on your analysis, and you are still able to be profitable. So all of this is shared just simply to say you have to absolutely understand what type of trader you are, what your risk profiles are, and what fits your personality in terms of how you want to personally approach the market to be able to then get an edge to leverage to make profit over time. So with this, let's say that we had a trader that was correct 40% of the time and they lost 60% of the time. So they had a 6-to-4 ratio here and they made $200. So $200 isn't much, but if you divide that by 10 trades, then you have $20 a trade. So at that point, you have a positive ratio. And you know that regardless of whether or not any one trade is a win or is a loss, that you are going to make $20 basically per trade averaged out over time. Now, if you can get your ratio up, this exponentially scales. So you can see at 5 and 5, just being correct a coin flip of the time, you're now making $500 per 10 trades, which is $50 a trade. If you are correct 60% of the time, you're making $80 per trade. And this can scale depending on what your reward to risk ratio rule is. 2-to-1 is fairly standard. 3-to-1 is a little bit more aggressive. It means you're going to have much fewer trades because it's hard to find trades that really do have a clear ability to make potentially 3-to-1 ratio based on what you are risking and what you stand to gain. But I just wanted to put this out here for those that aren't familiar with the idea of a reward to risk ratio and how you can be profitable in the market, even if your analysis isn't as good as you might like it, or even isn't as good as a 50-50 coin flip. So I hope that helps and instills a little bit of confidence in terms of the many, many ways that you as a trader can approach the market and still turn a profit, even if you don't have a great win to loss ratio.